morning, ladies and gentlemen. A very warm welcome to you on Business Today Television. This is Tuesday. The markets are resting a bit, and that's only to be expected at a time when the index Nifty itself has surged more than 7% in a 1 month basis, and 24,500 appears to be a resistance that seems to be working pretty well at the moment. So the Nifty down about 60 points, Bank Nifty has slipped another 360 points. Of the 19 indices that we track, 16 are in the red. The losses are led by the banking space. Nifty PSU Bank Index is down 1.6%. What's in the green are the defensive counters. Nifty Auto, FMCG and metal indices are the ones that are in the green. Advanced decline ratio is firmly in favor of bears. Just 600 shares are in the green compared with 1,650 that are in the red. Given this background, let's look at some market outperformers which are adding to the move on the long side as far as Nifty is concerned. Today, it's the day for telecom and auto stocks. Bharti Airtel is up 2.1%. M&M has added 2.9%. Aisha Motors is up 2.3%, and Maruti and Hindustan Unilever are also amongst the top contributors. What is pulling the Nifty down? It's Reliance, 1.2% lower. State Bank of India still unable to shake off the fourth quarter earnings, down 1.6%. ICICI Bank down 1/3%. Bajaj Finance and HDFC Bank down about 1.7.5%. To discuss the mood in the markets further, we are now joined by Mr. Sunny Agarwal, Deputy Vice President and Head of Fundamental Desk at SBI Securities. Namaste to you, Sunny, and a very warm welcome. What are you telling clients in terms of the change in sentiment on Dalal Street? How do you analyze markets at this point of time at 5-month highs?
Good morning, and thanks for having me on the show, Shailji, and good morning to all the viewers of Business Today. So coming to markets, yes, definitely sentiments have improved significantly post the recent correction. But one thing is pretty clear from the market structure is that the mains are getting separated from the boys. So the companies which are delivering a good set of number, or where the companies are relatively immune to the ongoing uncertainty pertaining to this global trade war. So those companies are attracting funds from all the set of investors. Case in point, within banking space, we have seen that a clear outperformance in terms of profit delivery from likes of ICICI Bank or HDFC Bank. So there we can see a clear outperformance from them. Coming to PSU Bank, Indian Bank the day before yesterday reported a very good set of number, trading at a reasonable valuation. So there we find a value in terms of further outperformance from here on. Coming to auto sector, the way M&M is firing all the cylinder, whether it is on passenger vehicle, SUV side, or on farm side, tractor side. So clear outperformance from Mahindra & Mahindra, and that continue to remain one of our top pick as far as the auto sector is concerned. So again, a clear-cut trend which is emerging is that market are getting narrower, and the companies which are likely to report a healthy set of growth. When I say a healthy set of growth, at least in line with nominal GDP growth or outperforming the GDP growth number, 12 to 15%. Those companies are finding buyers at every deep or are attracting fund flow from all set of investors. So ultimately, this is a time for a bottom-up stock picking ideas rather than a top-down, where during the period of April 20 to September 24, if you choose identify any sector, all the stocks within that sector used to rally. But gone are those time. Now it's a very stock-specific bottom-up growth story market, at least for the next 3 to 6 months, till the time this uncertainty pertaining to this global trade war and the geopolitical tension is of significance.
Okay, so Sunny, in the last 1 week or so, what are the top 3 or 4 stocks that you have advised clients to buy in whatever market capitalization space that you like, large, mid, or small, maybe for a nice 18 to 24 month horizon?
So coming to recommendation during the last 1 week, as we were discussing, today only we have recommended Mahindra and Mahindra post their stellar set of numbers. So Mahindra and Mahindra, we feel the fair value of the company is close to 3,500, 3,600 rupees. Keeping that price target in mind, one can approach Mahindra and Mahindra for 6 to 12 month investment horizon. Indian Bank, we have recommended post yesterday to our clients. So there we feel the fair value is close to 630, 650 rupees. So Indian Bank can be added in the portfolio with a short to medium term perspective. CEAT Limited, one of the leading tire company. So we have seen a good set of number by CEAT, and at the same time, the input cost pressure has eased off significantly, whether it is a lower crude oil prices, and at the same time, we have seen a correction of 20% in the rubber prices also. So CEAT continue to remain our top pick. Schaeffler, we have recommended recently. Again, Schaeffler reported a decent 15% kind of earning growth, and we feel that the company will continue to deliver healthy earning growth in FY26 also. So the Schaeffler, we believe the fair value is close to 3,800, 3,900 rupees. So Schaeffler India, we have recommended. And one more idea where we are bullish on is from a healthcare sector, that is Max Healthcare. One of the leading hospital chain of India. So we feel that Max Healthcare is likely to report a good set of number during the March quarter, and that is the one stock which we have recommended to our.
Okay, the names that I could gather are four-wheeler SUV giant M&M, tire maker SEAT, you have Schaeffler India, and the fourth one was Max Healthcare. So these are the stocks that yes, these are the stocks, and
Indian Bank.
The last one?
Indian Bank.
Indian Bank. Okay. These are the five that are based on fourth quarter performances, and please also consult an independent financial advisor if you wish to take a position in any one or a couple of them. So this is what Sunny has been recommending to his ultra HNI clients on the institutional side. A view on the rupee, Sunny? Do you see this FII buying that's happened over the last 11 days or so a function primarily of the rupee or fourth quarter earnings? How do you decode this 40,000 crore number that has happened over the last 10-12 working sessions?
Also, I feel there are two factors which is driving this rally in the rupee. One is obviously weakening of dollar index. So if you see a dollar index, so dollar is getting weakened against currency like euro or for that matter Swiss franc. So that's a natural tailwind for rupee to strengthen from here on. And at the same time, as you rightly pointed out, post this RBI policy where we have seen a rate cut by RBI, and at the same time a kind of uncertainty in the US market and valuation froth. Clearly, historical trend also suggests that a weakening dollar leads to the chasing of an riskier asset by a foreign institutional investor. And India being one of the best in class emerging market asset class. So we have seen buying, as you have alluded, close to the 40,000 crore number from foreign institutional investor in the secondary market. So that is also helping the rupee to strengthen from here on. So basically two factors. One is the weakening of US dollar, which is represented by dollar index. And second is obviously a better macro and picture as far as India is concerned. Backed by a good earnings growth by select large cap names, whether it is Reliance, which is one of the heavyweight HDFC, ICICI Bank. So that is leading to a lot of inflows from foreign institutional investor in certain stocks as well as in certain sectors.
Okay. Sunny, you already have a background of banking because the parent of SBI Securities is India's largest bank by any measure. What is the gut feel that you are getting when you read earnings of ICICI Bank, HDFC Bank? What are the sectoral positives that are emerging from these banking numbers?
Yeah, so one positive read through amongst all these banking number is that the recent ongoing pressure as far as NIMs are concerned, net interest margins are concerned, is likely to ease off maybe by second quarter of this fiscal year, that is FY26. And post that, we may see either stabilization of the NIM or increase in NIM. Coming to advances growth, although the system advances growth will be in the range of 10 to 12%, but there may be a certain a set of banks which will outperform these system growth. A case in point, ICICI Bank, or for the matter, private bank. Most of the private banks are likely to outperform the system average credit growth. So that's one of the factor. And third important factor is the concern on asset quality on unsecured book, especially MFI and credit card book. So that is easing off. So the asset quality is likely to improve in the unsecured book going forward, which will further lead to the increase in disbursement on this aspect, and that can give some protection in terms of NIM going forward. So all the three factors are working positively for banking as a sector. And one more factor, last factor, valuation. So trading at most of the PSU banks are again trading at a very reasonable valuation. Even the private sector banks are trading at a decent long-term average valuation, not at a very expensive valuation. So all these four factors are adding a lot of positivity to the banking sector.
Okay, and your view on software stocks? We've seen a very sharp erosion. Some of that has come back in an equally sharp rally on the Nifty IT index over the last fortnight. What are the top picks for SBI Securities in the world of IT? Do they hold out any hope for the next year or so?
Yeah, so coming to IT pack, we continue to remain underweight on IT pack. The reason being that there is a lot of uncertainty in terms of demand environment, and the same commentary we have been hearing from all the frontline IT companies. And that is the reason that even we are not aware that what is the kind of growth all these companies are likely to report during the first half or for the entire financial year 26. But still there are certain outlier. A case in point, KPIT continue to report healthy earning growth. Coforge has reported healthy earning growth, but again, one has to keep in mind that KPIT has not been able to deliver any guidance in terms of growth for FY26, looking in at an uncertain business environment. Coforge, a clear outlier here, wherein backed by a very solid deal wins, the Coforge may continue to report 15% kind of growth in FY26. So we feel the fair value of Coforge is close to 8,000 rupees. Keeping that price target in mind, one can approach Coforge. Coming to the frontline IT company, I feel all the negative is already in the price. So most of the frontline IT companies are now trading close to 19 to 23 times 1 year forward price to earning multiple. And looking at the healthy cash flow which all these companies generate, I feel the downside is very limited in the frontline IT company. So if somebody want to approach IT sector, I believe a gradual accumulation is the right strategy. When I say gradual accumulation, it should be over the period of next 6 months. And the company which can be on radar is I feel HCL Tech. So there HCL Tech, we feel the growth can be relatively better as compared to other peers. And the second in line will be TCS from the front line. Coming to the mid cap pack, KPIT and Coforge are our top pick.
Fine. HCL Tech is something to be looked forward to. The stock today flat as flat can be 1576 in futures, but has been a top performer over the last 2 or 3 5 trading sessions, mainly on account of earnings that were more than expected in the market. Sunny, when you look at the PSU setup, what looks attractive to you? We've had a very sharp rally in the entire defense space. These stocks have appreciated anywhere between 30 to 40% from their most recent lows, and we also have a neat bounce that has happened in the PSU banking setup. How do you analyze these two? And apart from them, are there any winners that you have in mind in the PSU segment?
Talking about PSU defense, as you rightly pointed out, because of this ongoing geopolitical tension post Pahalgam incident, I think we have seen a decent up move at least on all the PSU defense pack, whether it is a BEL, HAL, Mazgaon Dock, whether it's shipping companies. So a very decent set of rally we have seen across the defense pack. But still, we feel that if somebody want to approach defense PSU, maybe buy on dip is the right strategy, because once this geopolitical event is behind us, maybe the street will go back to looking at an earning growth number, and at that point of time, frontline companies which are sitting on a very good order book. So companies like BEL, HAL, Mazgaon Dock, all these three companies can be on radar from a medium to long term perspective. Buy on dip is the right strategy rather than chasing the momentum at a current juncture. Coming to PSU Bank, as we have discussed, Indian Bank is something which we feel have reported a very good set of number, and in fact, trading at a very reasonable valuation, 0.9 1 year forward price to book. So we feel the fair value of Indian Bank is close to 5660 rupees. Keeping that price target in mind, one can approach Indian Bank. Apart from banking and defense bank, we feel that Engineers India, although the company is yet to report the earnings number, but looking at a December quarter order book, which is a life high order book as far as Engineers India is concerned, and on the top of that, the kind of capex program which all the three major oil marketing companies, HP, BP, IOC, has announced, we feel that future is pretty bright as far as Engineers India is concerned, trading at a reasonable valuation, sitting on a very robust order book. So we feel the Engineers India, there the fair value is close to 253 or 260 rupees. Keeping that price target in mind, one can approach Engineers India. And obviously oil marketing companies, because of this lower crude oil prices and likely compensation by government of India on LPG subsidy. So here our top pick continue to remain HPCL.
The top pick in the OMC space is
HPCL, Hindustan
BPCL.
Petroleum. HPCL, Hindustan Petroleum.
HPCL. Okay, fine.
Yeah.
Okay. So two more stocks to look forward to, which is HPCL and Engineers India, based on either valuations or strong order performance, which might come via the accumulated order book. So that's the PSU segment, plus the five stocks that you mentioned were Max Healthcare, Schaeffler India, Indian Bank, Mahindra and Mahindra, and SEAT. So that's quite a load that we have for our viewers today. 11:18. Let's just take a dip into the market and find out stocks that have hit record highs before I get back to our friend Sunny. So all-time high in the markets are SEAT. That's something that's been described amply by Sunny in a while. Strong growth in numbers coupled with a drop in raw material costs as rubber prices drip. 4.4% higher today at 35.82. Remember, just a month ago, this stock was at 2300. So it's a very, very sharp rally that has happened. Chambal Fertilizers, 2.6% higher, 709 for you. Bharti Airtel, no stopping this one, 1.7% higher, 1900 for you. And of course, cigarette maker Godfrey Phillips, 8774. Dipped a bit, but today's high was 8989. So these are the winners in trade today as far as the fresh peaks are concerned. In terms of volume, you have CCL, which is Coffee Products Limited, 13% higher today, 673. DCM Shriram, 4.5% higher. Cummins slipped a bit. Yes Bank, this is something worth discussing, which we shall shortly. 2.4% higher at 18.16. Volume is 3.7 times the 5-day average. 31 crore shares have been traded, and that's primarily on news that the government of India has agreed that Japanese financial giant Sumitomo, MUFG, would be allowed to take over Yes Bank. Sunny, how do you see this development as far as the Indian banking sector is concerned? A Japanese lending giant will now be controlling Yes Bank thanks to the nod by the RBI and the government of India. How does that change the dynamics of the sector, if at all?
So first of all, disclaimer that Yes Bank is an associate company of SBI, so I can't comment on Yes Bank. But overall, on banking as a sector. This shows that there is a significant growth opportunity as far as domestic banking industry is concerned. And if Japanese player, or for that matter any MNC player, is venturing at a current juncture, and obviously as an historical data track record, you will always find that banking as a sector usually grow at a multiplier rate of 1.2 or 1.5 times nominal GDP growth. And India currently at a $4 trillion economy is poised to scale a height of close to $10 trillion over the period of next 6 7 years, 7 to 8 years. And that clearly shows that one of the fastest banking industry globally. And again, even in terms of profit pool, if you look at overall listed universe, the banking as a sector has got a largest profit pool, right? So that again augurs well, at least in terms of profitability. So again, we continue to remain constructive on overall growth prospect of domestic banking as an industry. And entry of any multinational player definitely give further confidence that this story is intact and can be one of the good wealth creator as far as the investing community is concerned.
Okay, so we'll also look at Yes Bank's growth story from the point of view of the Japanese lens. Generally, we've seen over the last so many decades that Japanese companies prefer to take work from their Japanese counterparts overseas. So let's see whether that connection helps Yes Bank or not over the longer term. Today is also a day where the Indian economy has overtaken the Japanese economy. So lots of positives coming back as far as this transaction is concerned. A couple other questions, Sunny. What's the view on gold at this point of time? Has the mood softened, or will the asset appreciate beyond 1 lakh rupees a tola for the rest of the year?
Again, Shailji, I'm not a commodity expert, but just looking at first of all, let us understand why the gold prices are rallying. Obviously, the trust in the dollar has reduced significantly, and most of these central banks are diversifying their forex holding. So that is the reason we are seeing a buying across the globe from all the central banks as far as gold is concerned, and that is leading to a rally because of this uncertain business environment. Now, assume an hypothetical scenario that going forward before the deadline which has been given by United States of America in terms of trade deal, if something positive materializes during this window, then I feel that gold prices may come under pressure, at least temporarily, although in long term can continue to remain in upward momentum. The reason being that between 1971 to the till 2024, all the central banks were accumulating dollar as a reserve. And going forward, they would like to diversify their basket. And the same was recently alluded to by Mr. Warren Buffett in the EGM, that going forward, the currency exposure is likely to change. And hence, the gold can be one of the safer haven as far as the global trade pattern is concerned, and the diversification of basket from the central bank is concerned. So maybe a short-term dip can be seen, assuming an hypothetical scenario that all goes well in terms of trade deal with US. In case there is no deal in this window of 90 days, then there is a possibility that gold may continue to rally from here on, even in a short term. So from a long-term perspective, I still feel, again, it's my personal view, that gold will continue to rally over the period of next 4 to 5 years. In short term, we may see some volatility.
Okay. With that, let's just get the final question in. Sunny, what is still being avoided at SBI Securities in terms of valuations? What is it something that you're not touching with a barge pole when it comes to equities, where you still feel there is a need for a correction?
So, rather than valuation, I would like to focus on certain sectors. So, sectors such as metals, which has got a global exposure, and there is a lot of uncertainty pertaining to the demand environment, how the things will shape up in the one of the largest economy like China. So there is a lot of uncertainty, but again, most of the negative is already in the price. So we have seen a massive correction across the ferrous as well as non-ferrous metal stocks. So would like to wait and watch as far as the metal sector is concerned going forward. And coming to valuation, despite of a robust number or growth outlook for capital goods as a sector, I feel still valuations are slightly expensive as far as cap goods is concerned. So would like to wait for a slight dip over there and before recommending any buy from that time.
Right. Thank you so much for your time, Sunny. It's a pleasure speaking to you. And let's hope that the 5+2 7 stocks that you mentioned post fourth quarter earnings and of course based on valuation parameters add color and life to portfolios. Thank you so much for your time. Ladies and gentlemen, we'll head back to the markets. 90 points down on the Nifty. 24,400 is proving to be a strong resistance. Banks are slipping 400 points lower on the Nifty bank, and the IT index is down a bit. It's a day of rest as far as the markets are concerned. लेकिन मंगलवार है तो मंगल ही होगा. Just look at how Maruti is outperforming the broader markets. 12,584 for you. A strong move coming into the entire auto and auto ancillary space. Keep watching Business Today Television. There's a lot that's happening on the other side of the break.
Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is the earnings special conversation. M&M Mahindra & Mahindra has come out with the numbers and a solid set of numbers yet again, and we are going to be focusing on speaking to the management to really understand the key drivers of growth